What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for several Chinese stocks. We're going to first take a look at JD, Pinduoduo, Baidu, Tencent, TME, Huya, CQQQ, KWEB. So let's start off with JD on the daily chart. So a lot of these charts, it's going to be my first time seeing them after a long time, so we'll just do a quick analysis. So JD, it looks like it's been dropping lower, obviously. It's still below the EMA, and you see this trend line is doing something. It's acting as some sort of resistance, so I'll keep it on the chart. I can go and move it from here. Yeah, so if I use it off the swing highs, you can see that price is still getting rejected from this trend line. So that shows bearish momentum is intact towards the downside, and we can still reach the measurement target because it has not been reached at the 28. So again, measurement targets aren't always reached, but when price is this bearish, still below the EMA, still below this trend line, then the measurement target is in play. So I'm looking for the 28 level, and then maybe from there we'll get a bounce. If we don't get a bounce from there and we start reversing higher, where would be the first target? Well, the first target can be a retest of the 34 level, because that was the breakout of this range. So price can pull back to retest it. So that's how I'm looking at JD in the short term. Let's take a look at the weekly chart. Weekly chart shows that we have 3 consecutive red weeks in a row. So this is not a bullish looking chart overall. In the short term, it's bearish. Long term, it's bearish too. You can see that price is still within this very wide downward channel. And since price is still below it, that means the bears are maintaining the angle of descent. They're maintaining the momentum towards the downside, and they can possibly reach the all-time lows at that $20 level or the 1942. So again, not a bullish looking chart. You can see that if you just saw this chart, you can say this is very bullish, right? Now it's the opposite. Price has been dropping lower, below the EMA in this downward trend line or channel, and it's working its way lower. So look for that $20 level if price can't reverse anytime soon in the future. So that's how I'm looking at JD. Now let's take a look at Pinduoduo. So it looks like this chart is much better than that previous chart. You can clearly see the difference right away. Price is still trying to break to that 103 level. It's having a hard time, so there's a good chance it could fail momentarily and come back to this trend line that I drew off the swing lows. So you can see that off the swing lows, there is this upward trend line in play right about here. And if price cannot break through that 143, it will retract lower and then move up higher. So Pinduoduo is attempting to reach the 142 level. I got that measure move target from right over here. This is all one leg up. This is the second leg up. Is targeting the 142 level. However, it's trying multiple attempts to get there. So there's a good chance that any time now it could fail and we could see a reversal. Let me see if I could draw a trend off these swings. Yeah, so it looks like we just had an overshoot also just recently, so that can lead to a sell-off. You can see that price was moving nicely in this channel. Then we had an overshoot. It's a break of the channel, which can lead to a breakout on the opposite side. Not guaranteed, but it can. But if not, I mean, the bulls can break through this 103 level to reach that 142. So me personally, I'm looking for higher prices even if price does pull back. This looks like a nice complete trend reversal. I'm looking for higher prices even if we do see a pullback. So unlike JD, if we pull back, I'll be expecting more downside. Pinduoduo has been already reversing up for quite a long time now. So again, it's trying to break through that 104 level. We'll see if it can. It's struggling to do it. If it fails, I'll be looking for a gap fill at the 81, and then maybe a trend line bounce off the low to mid 70s. That would be the next target. If price does somehow manage to stay above this $90 level, then there's a good chance it will break through that 103 level to move up higher to the 142. So that's how I'm looking at Pinduoduo. Weekly chart shows that price is a little overextended from the EMA, so we can pull back to that. Doesn't have to, but we can. And again, looks like we're seeing some type of double top action. So again, this is acting as resistance. Like I said before, I'm not sure where it's going to go, up or down. I gave you both situations. Me personally, if a bunch of other Chinese stocks are going to go down, there's a good chance this one will go down too. So again, I'll be watching out for that gap fill and then the trend line. This trend line needs to hold for price to continue moving higher. It doesn't always have to, but it's a much better look for the bulls if they maintain this trend line in the future. If not, then that's not a good sign. So again, price is pulling back, and we'll see if it can maintain support above that $90 level. Either way, if it pulls back, I think there's a high likelihood it will continue, even if it does pull back quite a bit towards that 142 level. Let's take a look at the next chart, Baidu. So here is the chart for Baidu, and it looks like the bulls are not able to reach that 202 level. That was the measurement target. You can see that this was one large leg up, price pulled back, and we saw a few attempts by the bulls to reach this target, and they're unable to reach it. So if price is unable to reach the target, it will most likely reach the bearish target, which is towards the downside. And you can see that it's from right over here. This is one leg down, second leg down, and we're seeing the second attempt of the second leg down, and it's targeting the 111, 112. So again, this is not that bullish of a chart. You can see that price is below the EMA, and we could probably draw a trend line off the swing high, something like that. So we are below this trend line, below the EMA, and the bulls were not able to maintain this acceleration upward. So I can go and remove this orange channel. And again, like I said before, this is not that bullish, but again, it's not that bearish either. You could really think about it as price has been just going sideways in this range-bound pattern since January of this year. So support is at the 117, resistance at the 155. So just because it's not looking bullish, that doesn't automatically mean it's super bearish, because a lot of times, it doesn't work that way. You can clearly see that it's not that bearish either. It's very balanced within this price levels. The market is not really going in any particular direction. So in the short term, very short term, it does look like it wants to go lower, maybe come down in this area right over here. But again, it's not looking that strong either towards the downside. So we could just continue chopping back and forth like this in the future. So Baidu, as long as it stays, within this yellow range, I think that's a good sign for future higher prices. If it reaches the measurement target, it might lead to a reversal. If it doesn't, that's even better, because that shows signs of strength by the bulls. But it would need to get back above this EMA and break this trend line, something like this, and then we could probably target the 155 level. But either way, I think Chinese stocks are still in the formation downward, and the measurement target has not been reached. Here's a take on the weekly chart. And after a downtrend gets a break, you expect two attempts in that direction, and that's what bears are attempting to do. You see there was one attempt down right over here in the past. We're in the formation of the second attempt, and if it fails any time now, we could probably see a strong reversal from Chinese stocks. So Chinese stocks are in an area where we could see a strong reversal, but in the short term, it is most likely going to work lower. But again, it's not guaranteed. If we do see a strong reversal, then you know why. It's because the bears failed to reach their target, just like the bulls failed to reach it, and that's what led to this sell-off. However, again, since it's still within this sideways trading range, either one is not as strong against the other. So they're kind of balanced, the bears and the bulls. But either way, this is still below the trend line, below the EMA. If we don't see a strong reversal right now, there's a good chance it will continue working its way lower towards the 117 and probably the 112. Let's take a look at Tencent. So Tencent was dropping down quite a bit, and maybe this will be a failed breakout for higher prices. So Tencent was in the formation of this large measure move down. This is one leg down. When price pulled back, this is the second leg down, and you can see the bears tried two attempts to reach it. It's failing, and again, this is just a small signal that it could be failing. Again, we need to see a strong reversal, something like this right over here, not just one green candle. So again, this could just be a breakout pullback and for lower prices. So since price is still below this EMA and still below this trend line, there's still downward momentum in play, especially because this measurement target has not been reached. So again, Tencent has the ability to move up higher, but I want to see continuation, not just a green candle. I want to see green bar, green bar, green bar, break of this trend line, pull back, staying above the trend line, and then continue like that. So that's what you want to see. You want to see strength to the upside, not just like one green candle. So overall, Tencent is still bearish, but it can reverse. This is a good sign. It's a promising sign. but I wouldn't bet on that continuing higher. It looks like there's a good chance that price may continue towards this mesh move target, towards this 255 level. Again, not guaranteed, but that's how I am looking at Tencent on the daily chart. Now let's take a look at the weekly chart. Here's the weekly chart, and you see that after a downward channel gets a break, you expect 2 attempts in that direction. And there were 2 attempts. This was one first attempt right here, second attempt. It looked like it failed and price was going to continue higher, something like that, after those 2 legs down. But then look at the bulls weren't that strong either. They made 2 small legs up. So that tells me that the bears can still continue working its way lower. And that's where I got this measurable target right here. The first 2 legs down are technically just 1 leg now on a bigger picture, on a higher time frame. So after the correction, this would be the second attempt. So this is still in play. Price is still below the EMA, below this trend line. Measurement target has not been reached at the 255. So we can still see lower price targets. Again, is it always guaranteed to reach those targets? No. What is a good sign for bulls is that they're still within this yellow range. And since we are near support, it could fail and move up higher. So again, let's see if that occurs. I think that's unlikely to occur. I think it's more likely price will probably continue dropping lower. But if it does occur, I just want to mention that we want to see price break this EMA, break the trend line, and then there's a good chance we may be seeing much more higher prices for Tencent. Here's a chart for TME. TME has been slowly grinding down in this very choppy green channel practically since this start of the year. So you can see how well these channels work. You know, they're containing price very nicely on the top and bottom. Price is still in this downtrend. The bulls were not able to reach the opposite side of the channel, which is a bearish sign. If price hits one side of a channel, you expect 2 attempts by the bulls to reach the opposite side. And we saw those 2 attempts. There was 1 attempt here, price pullback. This was the second attempt, and the second attempt could not stay above this trend line. And once that trend line broke, you can see that's when price started crashing down lower and lower. So we can go and erase these targets toward the upside because no longer is valid. And most likely it's going to be continuing lower. I don't think we need these measurement targets either. So it's most likely pulling back to this mid $5 level, the 535. That was the breakout point. You can see there was resistance there previously where these 3 circles are. I'll go and erase it. So there was resistance there. Since price broke out, is most likely coming back to test it for support. So again, price below the EMA. It was showing signs of weakness from the bulls because they were not able to reach the opposite side of the channel. They're not able to come back inside this yellow range right over here. They found resistance on the bottom instead of finding support breaking through it at the 692 level. You can see how this is a key level. It's been tested numerous times. Previously as support, now as resistance, and price is working its way lower. We're just seeing a pullback. So there's a good chance it will continue working its way lower. So again, looking for the 538 level, and maybe then we'll see a reversal. So again, is it guaranteed to get there? No, it's not. We can always see another move up higher, but again, that's lower probability. Now here's the weekly chart. Weekly chart shows that, you know, price has been slowly working its way down. Maybe after we reach that lower target in the future, we'll see another large leg up. That usually can occur after a large leg up. This is just like a flag pattern for another large leg up. But again, since price is still working its way down, you have to keep an eye on that first. So it's working its way down. It's not really looking bullish as right now, and we could still see lower prices. So here's a chart for Huya. Huya, you know, doing much better than the other Chinese stocks. You see that it had a nice move on Thursday, and it's starting to break this trend line that I drew. However, you know, this trend line can be adjusted a little bit up. Even then, you know, it looks like we're still breaking it slightly. So if I move it more shallower, let me see off of those swings, maybe something like that. So it looks like we are starting to break this trend line. This is not that convincing. The price could be a little bit more adjusted, something like that. So I wouldn't, you know, say this is a complete trend line break. And why is that important? Because it shows that the buyers or the aggressive buyers are showing momentum. They're showing strength. So this is still in undecided territory. This is not convincing enough. But either way, looks like price is moving up higher. We could probably use a measure move target now. Let's go ahead and remove these drawings. So the bulls made a nice move up from this 215 level. So this was one move up, price pulled back, and since it cannot go any lower and it started moving up higher, that is the second leg up, or the formation of it. So that target is the 312, but since price is below the 292, that can act as resistance. So again, this is not that great of a sign that the bulls are below the 292 because it was prior support, and if price is pulling back to it, it can find resistance off this level for more downside. So again, it's not that bullish of a chart overall, but in the short term, it is more bullish than the other stocks. It looks like it can continue to push up higher. It needs to get above the 292, 294 level if it wants to be a sustained uptrend and stay above it as support. That will lead to much more higher prices. Something like that would be the bullish case. The bearish case, which it's setting up to do, is actually just reaching the target and just, collapsing lower. So that's how I'm looking at Huya. Overall, in the short term, it is looking like it wants to move up higher, but if it stays below the 292 level, it will most likely continue dropping lower. If it does get above it and stays above it, there's a good chance we can probably see a huge move up, just like in the past. We saw a huge move up in the past, and we can make a similar size one in the future, especially because if the bears are unable to reach their downward target. This is one leg down from the bears. This is the second leg down, and the bears are trying multiple attempts to reach this 57 cents level. We'll see if they can do it. If the bulls somehow stay their ground and not let them do it, there's a good chance we can see much more higher prices. So here's the weekly chart. Weekly chart shows that price is pulling back to the EMA, very close to that measurement target that I had. So it's just pulling back higher for more downside. Unless it can break the 294 or $3 level and stay above it, we will probably see more downside. If you can get back above it, I think it's a very good sign. And we could probably start seeing much more higher prices for Huya. But until then, it's going to be bearish overall, just like a bunch of other Chinese stocks. Let's take a look at CQQQ. CQQQ, just triple Q. And this has broken support at that 38 level. Is working its way down. Price is below this trend line, below the EMA. So again, not a bullish looking chart at all. And where it would be the measurement target, well, this is one leg down right over here. Since price did a correction pattern, this is the second leg down, and it's targeting the $30 level. Again, measurement targets aren't always reached, so it could fail any time now. And if we see aggressive buying like we did over here, then you know that the bears most likely will not continue moving down, and we're probably going to see a very strong reversal to the upside. So what I want to see is break of this EMA, a break of the trend line, at least price getting back above the 38 level. If it gets in the 40s, it's starting to look pretty good. In the low 40s, it could probably pull back for higher prices. Something like that would be the bullish case, but that's not really expected as right now because the bears are still dominating this chart. We have the measurement target in play. Price is below the EMA. It's not able to move up higher as right now. So again, that is the best case, or the most likely case is towards the downside. For the best case for the bulls is obviously a failure by the bears to reach that target, which will lead to a strong reversal. But as right now, I'm not seeing that in the chart. I would need to see a lot more buying. Maybe if we reach the measurement target, for example, let's say we had one leg down and this was a second leg down and we met it, then it's much more likely to see that move up higher, But since the target is still in play and price is not reversing any time now, then the bears are dominating the chart. They're stronger right now than the bulls. Weekly chart shows that price has been dropping since January of this year, working its way lower in this downward trend line below the EMA, breaking support, measuring target in place. So again, not that bullish of a chart, and eventually we're going to probably see a trend reversal most likely for these Chinese stocks. Why? Because we're not really in this downward orange channel any longer, so it's showing signs of weakness in the long term by the bears, and we're seeing one leg down, and we already saw two legs down, but since we saw two legs up, that reset the pattern. So this is one leg down, two legs up, and we're seeing the second attempt to make a new low for this downtrend, because the bears were previously in this orange downtrend, and when price broke, a lot of times you'll see price come back to that prior extreme, which is right over here. So the bears have been trying multiple attempts. So if they fail to reach this target, that would be leading to a strong reversal towards the upside. Now let's take a look at KWEB. So KWEB is looking much stronger than the other Chinese stocks, just like the previous one I looked at, CQQQ. It's maintaining support above the 2651. You can see that it has been bouncing off that level several times. And if we can see a break of this downward trend line right over here, I think we could probably see a huge move up. I don't think this measurement target has to be slightly adjusted. This is one leg up. The second leg up could start from here, and that would be targeting the upper side of the yellow range at the 34 level. So there is this downward measurement target in play to the $20 level. However, the bears are not going to be trying forever. You're going to see 2 attempts. So this is one leg down. When price pulled back, it started the formation of the second measure move lower, and this is the first attempt to reach it. Price failed, and we're seeing the second attempt to reach it. And if it fails, usually you'll see another attempt. So sometimes the second attempt will be 2 attempts. So 3 pushes overall. This is the first push, second push, and I'm looking for the third one to fail. If you can stop at that 26 level again, that's what will lead to higher prices, especially if we see a break of that trend line. So that's how I'm looking at KWEB. It's still in play towards the measurement target, but it's not able to reach it from this 26 level. So if we can see one more bounce up off that level, if price does drop lower, then that's a very good sign. If we do just see continuation to the upside, I want to see a break of this trend line, a pullback for finding support. That will lead to higher prices. So again, a lot of these Chinese stocks are in the area to potentially reverse higher. However, the bears are towards the end of their attempts down. So if the bears fail, I think a lot of these Chinese stocks will rally in the short term. So that's all I have for KWEB and a bunch of other Chinese stocks. And most likely I'll see you guys next week, Saturday. This is Vee Trades, and thank you for your time.